Welcome to a kind of an instructional video and some technical analysis using the gold chart today. I'm just going to go over a couple of strategies that I use to break down charts and chart structure and find momentum and price movement. So basically I use three key factors: the Elliott wave theory, Fibonacci sequence, and obviously just plain old simple price action. Find out where price tests where it gets rejected at, and where the supply zones are. So, but mainly I want to use the gold chart because a lot of charts I've been counting in ABC patterns or WXYs, which are three wave moves. But here there's an argument for the gold chart that we can count five wave structure. Now, Ralph Nelson Elliott invented Elliott wave theory, and he said that he was an accountant back in the I think early 1900s, and he studied the stock market charts, and he was able to interpret five waves up. Every time he saw five waves up, he saw three waves correction. And they subdivided themselves. So if you saw 1, 2, 3, 4, 5 up in the ABC correction, that would be set up for a bigger 1, 2, 3, 4, 5 up and a bigger ABC down. So each impulse. This is an impulse. The five wave structure is an impulse, and then the ABC is a correction. So each impulse leg had subdivided into five waves of themselves, and each correction subdivided into an ABC. So the first leg here was made up of five waves. This third wave was made up of five waves, and this fifth wave was made up of five waves. The second wave and the fourth wave were all ABC corrections, a type of correction. There are many different types of corrections, but I'm not going to get into that today. I just want to focus on a five wave structure and a correction called an expanding flat, which is made up of an ABC move. Now, the question here on the gold chart is, can I count this in five waves, being 1, 2, 3, 4, and is this fifth wave done? Or there might be a fifth wave higher to go. Regardless, can I count that in five, or can I count the 1 and 3 just in three moves? 1, 2, 3. This would be considered just one move, and this pullback considered the correction. So this would be a 1, 2, and then a 3 up, and that would make an A move. All of this would just be a move for an A. Or WXY, but I don't. For argument's sake, we're just going to label my three moves either an A, a B, or a C. So, the understanding Fibonacci sequence and Elliott wave, it's really simple. It's like chess, I mean, it's kind of easy to grasp the rules, but there's just so many different strategies. And with Fibonacci sequence, it was invented by Leonardo Biggio back in the 13th century. So he was a mathematician, and the Elliott wave from Ralph Nelson Elliott, he uses the Fibonacci sequence to figure out where waves are going to go and how far they're going to retrace. So he incorporates that into the Elliott wave theory. I kind of put more focus on the Fibonacci sequence. And the numbers are real easy. You just start with 1 and you add it to itself, the previous number, to get the next one. So 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8, and so on. Now, the percentages that we use for Fibonacci sequence like these numbers here for your retracement tools, the 38.2, 50%, 61.8, all this. Well, they're supposed to be derived from the Fibonacci sequence, but some of these really aren't Fibonacci percentages. Really, the only ones that are the 23.6, 38.2, and the 61.8. I think Ralph Nelson Elliott, maybe just as he was studying his Elliott wave, found that 50% retracement was real common in a lot of his charts. So I think that's why a lot of these percentages are incorporated in these trading platforms today. So that's what I use. I use a lot of these Fibonacci percentages to figure out moves. So, and I look for overlapping fibs. So you can see I have 2 or 3 here that overlap. And usually 2 that overlap is enough for a significant move. So that is where I'm at. And just real quick, I just want to touch base. So like to figure out these percentages, you just divide the number. Like let's take 13 and divide it by the next one, next Fibonacci sequence in the order, which is 21. So 13 divided by 21, it gets you 61.9%. Okay, so the closer you get to these bigger groups of numbers, you're going to get the exact 61.8 golden ratio percentage. Okay, now instead of dividing it by the next one, skip one and divide it by the next one after. So let's start with 13, skip 21, divide it by 34. That gets you the 38.2%. Okay, this is right here at the 38% level. Okay, so now let's do 13. I think it is 13 divided by 55. So skip the 2, go to the next one. So 13 divided by 55 is 23.6. That is this percentile here, 23.6. So those are your percentages from Fibonacci sequence. Okay, now all these other percentages, I believe, are derived from Ralph Nelson Elliott as he studied his charts. So incorporating these 2 combinations with price action and a couple of my indicators, this is how we're going to figure out where gold's going today. Like I said, my question was, do I count this in 5 waves? Being this might be a 5th wave here that's complete because I've had these fibs that overlap, and I get these measurements simply by just measuring prior legs. Okay, I mean, you don't have to be an expert in counting waves to know that. Even though this is a mess here, let me see if I can move this here. Okay, so you got some kind of chart movement here, price action movement here, price action movement here, and then some internals on a lower degree here, one here and one here. Okay, so that's what, time plays a factor in reading charts. So I can tell you right now, these are lower degrees because the time factor. This took from this top here in August of 2011 down to like December 2015. It's like 4 years. Okay, and then this little correction here is just a year or so, year and a half. So that's, you can calculate the duration of a correction by Fibonacci sequence also. Okay, so let's say each candlestick's at a day. So after 3 days, you might have a little correction. After 5 days, you'll have a little correction. After 8, a little correction. And then as the numbers get bigger, the bigger the correction will be, the more significant. That's why I say, remember we did our percentages for the golden ratio. The bigger you get to 89, 144, 233, and divide them into the next number, you get a closer, more exact 61.8%. Okay? So it's a lot of information to take in. That's why I'm going to try to do these videos in like for example, the gold chart is a good 5-wave structure to implement this Elliott wave theory here for just a simple 1, 2, 3, 4, 5 ABC pattern. I mean, in a nutshell, this is 80% of Elliott wave theory. Okay, so anyways, moving on. So yeah, the correction duration, that's where I stopped at, but we'll come back to that. Let's focus on these overlapping fibs right now, because we're trying to find gold. We're trying to figure out, is this a top for gold, or is this a lower degree top where it might just have a little bit of a correction, and then we continue to the closer to the 3800 level. So because it's a pivotal point for gold right here, just by looking at the chart. If I count this in 5 waves, I mean, there is an argument that this 5th wave could be done here. So let me ask you this: if this 5th wave is done, what kind of correction are we going to see here? All right, well, you take out your little tool here, and even if at 38 percentile here, 38.2, that would put us back at 1,794. Okay, and I don't. Fundamentals isn't a part of this channel. I only strictly go by the charts. We can get a big picture of everything, and then we'll zoom in on a lower time frame to figure out direction. So there is an argument that there could be a small pullback. So we're going to continue on and see if that is a factor in this chart. So let's see. So I've already done the fibs. So you see these white lines here. These are the legs I've measured. So I've measured this leg here to get our fib extensions up here. And I did this leg here also, and then an internal leg here. Yeah, so this one to this one. And that got us these 3 fibs: a 200, a 150, and a 161.8. Now, that's as much as we can go on the monthly time frame. Okay, that's about, I got as much information as I could going into the a lower time frame. So now let's go into let me just show you real quick. We're going to zoom in first. We're going to zoom into this move here. Try to figure out what this is about. Is this a 1, 2, 3, 4, 5 here? Or is this a 1, 2, 3, A, B, C? Okay, because I am also anticipating that if this is 5 waves here, that I don't think this 5th wave could go here because the time duration, right? This took 20 years for this correction to play out, from 1980 to 2000. Okay, 20 years. This is only like a 5-year move here. And 4th wave corrections can be pretty complicated, and this is where you start to see some expanding flats, triangles, corrections like that, WXY patterns. So this was my first measurement. Once I figured that out, I took this 3, top of 3, to the first move down, and that's where it got us the 200% right there. Wait, was it 200? 150. I think it was the 150. Let me redo this. Nope, it was the 200. Okay. Let me zoom in. Yeah, 200 right there. If it, I'm going to erase it and see which one goes away. Or, nope. All right. This chart's such a mess all of a sudden. Okay. Let me do it this way. There. All right. 200. And I mean, it hit right. That's pretty close, right? But you know, and then you have the 150 and 161.8. These are close enough for overlapping to say this is some kind of pivotal turn. Okay, so write that down, notate it, and we'll come back to it. Now let's take this out again. I can remeasure that later. So I'm trying to get to this leg here. Okay, so there is an argument that this still could be five-wave structures, five-wave structure, but this being maybe an A and a B, and is it a C, D, E, or is it an expanding flat, which is A, B, C? An expanding flat is something like this, where the B leg goes past the start of A, okay, and typically those are 123.6 extensions, so it would hit somewhere down here. If that's the case, that means this wave here would be somewhere down here. Nah, I just don't see that happening. But I do see an A down, B up, C down, D up, and E down, maybe for some kind of weird triangle pattern. I've seen that a lot on a bigger time frames on other stock charts. So, you know, too early to tell for all that. All we're trying to find is if this is some kind of pivotal move, because if we want to trade this, we just need to find where the momentum is currently, you know. So is it turning, or is this impulse still, is there still more upside to come? Okay, and to know that, we got to dive into this move here. So the previous move was a 1, 2, 3, okay, and that one's done. We guess we can look at the correction here that it made too. So we need to look at that. It would help if I had the right tool. And it's past the 38.2. What kind of correction is it? Probably expanding flat. Didn't even really hit the 126 though. 123.6 on that either. Kind of a weird correction, to be honest. So that would tell me that this wave here is part of something else. Oh, okay. Maybe we take it from here. Yeah, okay, so it hit right on the 50, just measured from this wave. So this wave here is strictly part of this wave, the prior. Let me get rid of this. Okay, but like I said, insignificant right now. We just need to focus on this wave here. Now you can see this wave going into it, that we need to measure it. So let's take the top of this first leg here to the bottom, and there's really, is that the 150? Let me remeasure that. No, not the 150. I'm sorry. I'm looking at the 261. So it's not even, really didn't hit it. It was a little close to it, but not quite there. So maybe that could indicate if there is a turn, maybe it's kind of small, maybe we're going to try to test it. So we'll come back to that. Write that down, push that to the side. We're going to keep moving on. Now we need to focus on this move, okay? And right away you can see 1, 2, 3, 4, 5. Okay, so let's zoom in here. Now the question is, do you count this as 1, 2, 3 and this is A, B, and C? And my argument says I think you can. Boom, look at that, pretty close to the 161.8. The candlestick actually closed on the 150. So write that down, push that to the side. Let's put everything together. I'd say we have a lot of overlapping fibs right now that tell us that we should have some kind of correction in gold. Now we got to get some confirmation out of our indicators. Now again, these are monthly candlesticks. Okay, we're gonna go to our indicators real quick, and we're going to put those on the daily to see what kind of direction we have for gold. Now, first up is the RSI. The momentum has already been turning down for a while, and again, this is on the daily time frame on my indicators. Now, as long as this RSI stays above this yellow dotted line I have here at 50, the chart's still considered in an uptrend. As far as the MACD, as long as this signal line, the white one, is above the 0 line, still considered an uptrend. The ADX really just is the strength indicator in the direction it's going. So the ADX right now is at 32, 31, and not really looking like it's trying to push any higher. Usually around 40, 45. Up in here is when, this is up at 63, so that was a pretty good push up there in 2024. All right, anyways, staying on track. So let's look at the MACD. You can see the signal line here is consistent with our strength indicators on these last 3-4 pushes here. 1, 2, 3, 4 started getting away a little bit from us here. Okay, also our moving average is looking like it wants to cross. Every time these two lines cross, there's some kind of change in direction in the chart. So it does look like we want to come down a little further for gold, judging by the indicators. And I bet you the RSI wants to try to test the 50 out. Okay, it looks like it's done that a couple times and failed already. So this is going to be, like I said, I think it's going to be a pretty pivotal moment for gold. If this upcoming turn, if it can hold a lot of its resistance to determine on how much downside there was going to be. So I think this is enough confirmation to say that short term there's going to be some downtrend in gold. So now let's go to the daily real quick, just to take a look at the top and then look at these candlesticks. We can say that maybe this looks like a start of an expanding flat, which again, remember, this is the opposite direction too, by the way. So the I'm looking at it this way: A, B, C. Okay, this one kind of goes the opposite direction: A, B, C. So we're measuring for B. We're measuring the 123.6 for the B. Okay, so to do that, get your retracement tool out. Start at the top, go to the bottom here, and we got a 123 on here. So I bet you on the internals there might be another expanding flat, which disguises itself in this move, says that okay, we hit 150. That's why I keep a lot of these percentages up that these platforms give you, because it's instead of diving in on the 30-minute time frame, it's still the same outcome. And you don't have to be a mathematician to know that there's a lot of different ways to conclude mathematical problems and in different with different formulas, right? So we got an A, B, and maybe possibly looking for a C down. So that might be an indicating process for a move down. Excuse me. So let's dive in a little deeper on the time frame. See if we can find anything else. Let's just skip the 4 hours, go right to the 30-minute time frame. Okay. So this is the same pattern, what I was thinking, maybe an A, B, and a C down. But to remember, I said that 150% up was up here. So let's figure out how we got that. This looks like it should be grouped together. So let's measure this leg. Still have the 150. So let's say I don't really like that. Let's say I'm looking for more of a 200 or 161.8. Anything else that you can see in that pattern? Maybe an A, B, C, D, and an E. That would kind of make sense with the turn. You know, the chart's still in an uptrend. We just need a little bit of a turn down, right? I mean, the expanding flat, if we measure this, then the 123 is at 27.09. That could be a target. So let's say it's a triangle though. Let's say it's an A, B, C, D, and E. We're looking for the E down. It's the same procedure. You still the same measurement, 27.08. That's why I say, you know, math is kind of funny that way. You can have you know, same answer solved two different ways, and that's what we're doing here. So sometimes you don't really have to be exact on your Elliott wave theory counts. You just need to know, you need to have some kind of implication that the Fibonacci sequence fit. So this is where we're at. Let me see if this move up here makes a little bit more sense with the triangle pattern. If this is an A, this is a B. Look at there. Your B leg and your D leg. Remember I said triangle patterns correlate within each other. So this is a 161.8. And remember, in Fibonacci sequence, 61.8 is the golden ratio. And that is really significant when it comes to Fibonacci sequence. So yeah, so maybe this is a triangle. So like I said, it didn't really matter if it was in a triangle or an expanding flat. We're still looking like we're probably going to head to 27.09. So that is what I'm writing down for our target. It was really 2709.7, but okay, I'll leave it. But I don't think, you know, that would just be like a first target. You know, these fibs will indicate potential price targets on the wave down, on the way down. So that's why we'll continue to watch our indicators here and see where the RSI is at and the MACD when price hits the 2709. So let me take this out for a second. Let's just say if we were trading this, because if you're looking at this move down, all right, the way from where it started turning, you want to figure out what it's doing here too, right? So let's figure out the correction, which is 50%. So that fits in a triangle pattern correction. I would say if this was 61.8, then it would be a stronger push to the downside. That would be your zigzag for a C leg. So I'm really leaning towards a triangle pattern here. So what else can we figure out? We can also measure this first leg to get our C leg down, which here is a different target for the 123.6. So 227, what does it say? 27.28. So we need to probably put that down for our first target, actually. $27.28. Okay. So yeah, that would be our first target. Always have to go by the most recent wave. Okay. So that's how you measure. So this would be an A, B, and a C. So to get C, you measure A. Okay. To measure the correction, you measure the retracement from A. So a lot of these movements, are based off the first leg. So yeah, that's about it. Like I said, really just can focus on short-term movements for right now. I think looking at the overall chart for gold, though, is a pivotal moment. I think there's a big argument for whether this is topped out or there's further upside. So this is going to be an interesting chart to see how it unravels. So anyways, I hope that helps, and good luck in your trading.